Folks, what a day today in the market. We're about an hour yet to close, and we're doing this for just a half hour, hour and a half rather, until the close. S&P is up nearly 1%. We'll see if we can finish towards the highs, towards the all-time highs on the SPX, the all-time high being March 8th. Of course, what's causing the market to stretch today is big moves from Google. Apple's not exactly near the top of that list, but Apple gapping this morning, up 1.5%. Again, we say AI, the market goes higher. Apple's a stock off the lows. We're looking at 180, 185 up here. We'll see if we can get there. But right now, again, we're just seeing the lift as Tesla being an oversold stock is rallying, Adobe an oversold stock that's rallying, Apple an oversold stock that's rallying, Google an oversold stock that's continuing to rally off of its lows here. We've completely erased any earnings drought that we saw. Again, the outlook for Google was not great. Stock gaps down. We continue lower. Now we've made all that back. So what's next for the market? And as we look at this week, there's big announcements coming up, namely the FOMC policy statement on Wednesday. Is this going to move the market? It might. Well, they're not doing anything or expect to do anything on interest rate policy. In fact, let's quickly take a look at that. So if we come in here, we'll go to the CME Fed probability tool on cmegroup.com. Again, March is bringing us nothing. 99% probability the Fed is on hold. We go to May. We're now 95% probability on hold. Well, guess what? Not a month ago, that was 69%. If we go to June, passed over here. June, we're looking at almost a 50-50 bet of a rate cut in June. This has really shifted from where we were in the past. Okay, we're 46% against 24% just a month ago. The point is that we're shifting, right? We've had inflation data, PPI, CPI last week, both coming in hotter than expected. We're seeing expectations shift in terms of Fed policy. What we're about to get this week is a dot plot, basically what the Fed members think interest rate policy will be. And I bring this up a fair bit because I think it's very, very poignant that JP Morgan, their profit outlook in their last earnings was about what? It was purely about the Fed cutting rates 6 times this year. Well, if we go out to, for example, December, we say, okay, where are we going to be at the end of this year? Notice where this is, right? About a 50% chance of 4.5 to 4 3/4. Well, that's 3 rate cuts, not 6, right? We have a 39% probability that they only cut what? That'd be take us 50 basis points lower, right? 5.25 to 5.5 to 4.75. After Tuesday and Wednesday's meeting and the press conference and the announcement, how do these shift and how does the market play with these dynamics? Because remember, again, it was right here where JP Morgan had suggested 6 rate cuts by the Fed. These are all kind of big single prints. Again, JP Morgan suggested there were 6 rate cuts. That would take us down to 4 to 4 1/4 if each rate cut was a quarter point, which that was the expectation. We've had the market move significantly from 4,800 to now 5,150, almost as high as 5,200, all on the premise of rate cuts. We could say, no, well, there's earnings. Yeah, I get that, but the earnings growth is actually going backwards instead of forwards, the expectations. We're also entering right now where we're coming up, let's just bring up JP Morgan here, coming up on the first round of earnings announcements in about a few weeks. And we're going to hit that kind of a blackout period in terms of insider trades. The market's going to have to start to rest on its own 2 feet. And right now, we're bidding up stocks that were oversold. Pepsi up huge today. Well, what's the news on Pepsi? Okay, gets an upgrade. Organic sales growth. Why is there organic sales growth today and not back here when it dropped on its earnings? The optimism is running wild right now. And again, we have data point coming up on Wednesday that's rather significant in terms of the outlook for the market. If we bring up Forex Factory, or we'll go refresh this. And we'll go to this week and we'll get to see the big announcements. We talked about the FOMC policy statement, right? The Fed funds rate, the press conference. We've got manufacturing. Fed Powell speaks on Friday. So whatever mess he creates here, he can try to walk it back there. A number of Fed heads speaking on Friday that may impact the market. Again, what we're seeing right now is what? A modicum of a bubble, right? It's a consequence of excessive Fed policy, right? That's leading to this excessive move. And right now we're seeing that gold understands that finally. Bitcoin /BTC has been understanding that for a while. Yes, we see flows into Bitcoin ETFs, but this is bigger than that, right? Why are people flowing into Bitcoin ETFs? This has a tremendous potential for volatility. This isn't a great store of value. But the fact of the matter is people are looking for an alternative to the US dollar. Now you might say, well, $DXY, well, the dollar index isn't falling apart. I get it. But this is the dollar against the euro, the dollar against the yen, the franc, right? The Canadian dollar, the Aussie. This is a relative price. The fact of the matter is the mess that we're in is felt globally to one degree or another. And it's felt nowhere more significantly than in the yen. So bring up USD/JPY. What do we got going on here? Okay. Dollar strengthening a little bit against the yen. Well, let's go back to this calendar here. And in fact, let's take off the dollar. We'll go look at the Japanese economy, right? Tonight, tentative. What does that mean? A BOJ policy rate. Do they cut? They're not expected to. Might they? They could. Could they scale back QE efforts, quantitative easing efforts? Yes, they might. They might scale back asset purchases en route to taking away negative interest rate policy, which has been an absolute failure. Notice this, expected to create a negative trade balance here. Well, they're a country that wants to have what? Be net savers. They want a positive trade balance. Expected to have a negative trade balance here. How often does that happen? It's actually been quite profound over the last couple of years as their currency has weakened rather substantially. This is the consequence of inflation, right? Of excessive monetization and printing. You compromise your health of your country, and it's going to be very, very difficult to be an export-based country with negative interest rate policy. I mean, it's crazy to think about. How long have they had negative rates for? Oh man, going back many, many, many years. Okay, so two catalysts that could create market volatility today. We'll look at the VIX. The VIX today, sorry, not UVIX, VIX. The VIX is remaining elevated about 14.5%. The skew is remaining, actually dropped a little bit on Friday, to about 138, still elevated. Today in the SPY. So as all this dynamic is playing out, guess what? We're seeing some rather sizable hedges being put on in the SPY, for example. Okay. One is a roll up. So let's look at the May expiration out here, right? And we're going to look at option open interest and volume. Scroll up here so we're more connected to the chart here. Sorry. Right here. 483 to 489. What's happening? Today was the day they chose to roll 43,000 contracts up from the 483 to the 49 strike. So in response to today's 370 move, they moved this strike up about $6. Okay, saying, look, we're kind of nearing resistance up here, wanting to be hedged, right? In case the market declines. Let's look at another one here. 70,000 contracts. Let's go to the 25 March expiration. 25 March expiration right here. This is a spread. Buying the 512, selling the 511. Again, trying to take a little bit of downside here in case the market slumps. Is it projecting a major decline? No. 511 is down right about right here. It's kind of inside this range, but the idea is if we fall back, this provides a modicum of kind of hedging ability. Don went over this morning how to hedge in various ways. The atomic hedge, he walked through how to sell calls and buy puts. He also walked through how to buy put spreads today. Great opportunity to learn lessons in hedging because that's exactly what's happening. And with skew above 130, institutions are still generally hedged as Google and Tesla are eating up their oversold kind of losses here, especially in Tesla at 6%, way oversold in the near term. We're just getting the bounce back here. Google making up its gap lower following its earnings. So just realize this is a very precarious position the market finds itself in. Now, as we look around at surrounding trade, can we continue to see move in these stocks? Yes. Today's candle is relatively bearish. If we finish this way, they're selling into this gap here today. Apple, they're selling into this gap. Nvidia, selling into this bullish move here today. And we'll see where we finish in an hour and 10 minutes. Okay? This could be very pivotal, but remember, what we're seeing today may look very different at the end of the week. What we see on Wednesday afternoon to Thursday morning might be different than what we find Friday afternoon. And this is why the VIX is remaining elevated, right? We're kind of pulling back in here just a little bit. We may see skew rise today as we're seeing further hedging activity coming in. But the reality is we're expecting a fair amount of movement this week. And we have catalysts tonight and Wednesday that could really move things. And if we look at the expected move for this week, the 22 March expiration, we're talking 72 points. Tomorrow, 34 points. Half of that almost occurring between today and tomorrow's close. Okay? So get ready for a potentially bumpy ride this week. There is expected movement. There are catalysts for that movement in terms of monetary policy, both in the US and Japan. And watch the yen. If the yen begins to surge and we see this really start to break out here, watch out. This can create a lot of stress on the markets as the carry trade reverses. And we're at the 1/3 retracement right now. Again, very key level. If we break through, we retest the prior high. If we break down, we may stretch to 144. And this trend may carry us to 140, maybe back to 132 or lower. Everything depends on how fast this unwinds, if it does. All right, let's look at some trades here. So it's interesting, silver. Silver's been on a tear. It's kind of hit my target. This level up here, 23.30. If we break out, we may go next level, which is around 24. And you've got to start to reach back. Where's the next level beyond 34? We're talking 24. We're talking 26. Today, the trade in silver was a June expiration. Just to put this in perspective, a June expiration. Yeah, let me find here. My notes. Out of the money at the 35 strike. Got to scroll down a little more. 36,000 contracts, mostly bought at the 35. What are they playing? They're playing basically saying the Fed's going to mess it up by June, right? The Fed is going to go back to cutting rates. That's the catalyst that gets us to 35. Be careful. We may have some near-term pain as the dollar may go the other direction. But if the Fed comes in dovishly, boy, we may see big moves in silver and gold. But today, bullish trade in silver. Gold's basically flat on the session. Another one here as we think about IBM. Technology. IBM's been on a little bit of a tear. It's one we kind of caught off the lows, hit the highs, broke out again. We faded back to support. Again, looks like they're trying to make another run at this thing, seeing if they can break it out through the highs. But for IBM today, got to find in my list here. A 22 March expiration for this week. 4,300 contracts, mostly bought at the 195. So again, we're trying to push technology. IBM's a part of that. Highs about 180, 98, 94. Look for a swing to that level this week based on that activity. It also is a little bit defensive. Let's look at Keurig Dr. Pepper, right? Nice bullish candle today. Friday's volume was high. It was actually a slightly bullish candle as we came off our lows, held. We're rallying today, engulfing kind of this kind of prior several day range or open close. But again, bigger move today. Volume's a little bit lighter. But again, we're kind of, if we can close above this level, we may have a chance to retrace towards that 30.5, maybe 31.70. Okay. So Keurig Dr. Pepper, the trade today was in April at the 31 strike, which gets you back that 50% level. So April 31 strike right here. Can you construct an upside spread? Yes. Right. You could buy the 29, sell the 31. There's premium to be sold there for about 70 cents on a $2 wide spread. $31 is right here. you're already close to your break even with the stock at 29.43, the break even 29.70. Okay, not bad. Let's look at Hood. Robinhood, your typical kind of high short interest stock. It's been on a tear. We hit the that's not right. We blew through, right? And several levels here. I gotta clear this out here. But if we take this seed wave, right? We have this downtrend. We have this seed wave right here, pull back, earnings hit. We've hit the 423% projection. Okay. It's been a substantial move in Hood, right? Over the last little bit. And as we look at the 28 March 19 strike, again, we're looking at next week's expiration, $19 strike price or 29,000 contracts. It creates a gamma level. So near-term expectation 19. If we start to break through 19, it may help push it to new highs here. Again, bigger picture. If we go back on a weekly chart, this is maybe the seed wave. 261's up there at 23. So the stock generally has relatively high short interest. We're in a squeeze right now, and the expectation is going to further squeeze. But that high at around 19 is going to be rather significant. Again, gamma level, we start to break through, could really push it to that next level in Hood. And do you have the ability to speculate the upside? Yes, you can do it relatively cheaply. Go out 30 days, 19.20, it's going to cost you about 27 cents. Risk 27 to make 73. Okay. Two more. NCLH. Got to get cracking here. NCLH. I'm on my session 4 minutes here. So NCLH kind of breaking out today out of kind of a flag type pattern, near-term expectation at 21. And if we look at NCLH, again, generally a high beta name, it is a 22 March expiration, $20 strike price here, creating that gamma level. We start to break through, could push it back to prior highs just over 21. You could buy a 19, sell at 21 here, buy a 20, sell at 22, expect to get back to prior highs. Both those would be possibilities for that April expiration. Finally, we wrap things up on a bearish note with XHB. Where is 10-year treasuries going, right? Yields continue to rise here. This jeopardizes the market unless the Fed basically says they're going to cut rates. Lowe's, Home Depot, home builders, all in the mix here on XHB. And this today was a 5 April expiration. And we're looking at downside here, 101.50, 97.50. Again, that's not a terrible spread. You could go closer if you wanted in here, but expecting off this very overbought precipice, looking for some significant downside here in the near term on XHB, the home builder index. Well, folks, wrap it up there. We'll catch you back next.